Hey everyone, I'm Charting Man Dan with the Chart Guys. I've been trading cannabis stocks for over the last 13 years. We're going to check in on this sector after we've started heading into earnings. Green Thumb, True Leaf have reported. Other companies still yet to do so, and the dust is now fairly settled as far as the reaction to the headline of Schedule 3 from last week. Let's talk about the sector. All right, so first I'm going to take a few minutes here to set the context with which we're going to do technical analysis and look at the charts, because there's a lot of things that run through my mind when I go to say things in these videos, because there's a fine line between wanting to be transparent and say what I'm doing, because that's part of the educational process and showing what a trader is doing, versus not wanting to influence people to do things outside of their wheelhouse. For example, the only people that should be trying to do what I'm doing are people that have devoted a significant amount of their lives to learning how to trade and to technical analysis. So I know some people are going to be looking to hold longer term, and they know they've got the dangling carrot of the election and Florida recreational vote and Schedule 3 becoming official further down the line. Ideally, all those things are happening in November or before November, and there's nothing wrong with that. There's just different ways that we trade this market, obviously. So I personally, as I mentioned in the last couple of videos, was going to use the next bounce as a second chance. And I'll show on the chart what I mean by that second chance opportunity after we get a big surprise candle in the market. And the day after the Schedule 3 headline, certainly for me, was a big surprise candle as far as this is way more retracement than I thought it would be. So I react to that information and I size down my exposure in the sector. And right now, I am vast majority cash while I patiently wait. But you have to keep in mind that for me as a full-time trader, I know a number of things. Number one, I'm always going to be real close to the computer and real close to any changing developments. And just an example of that, as a full-time trader, this past Friday, I was heading into the day swing trading some gold miner stocks, and they were set to gap up open with some strength. And so my mindset is I'm taking profit today in this swing position. And I had zero intention of looking long in those names on Friday morning. And then 5 minutes later, I'm in a long position. How does that make any sense? Well, I saw a trade setup on the short-term timeframes that gave me low risk and high reward, and I took that trade setup. I positioned myself. I ended up stopping out break even. No biggie. Trade didn't work out. But my point is, from 5 minutes to the next, I went from I have no interest going long to, oh, I know this setup. I'm going long here and pressing the buy button. And so I can literally change from being 100% cash in this sector to being fully in a position in a matter of 5 minutes. So again, I keep saying technical analysis is reacting and not predicting. And so, when I say things like I'm now mostly cash, just be aware that can change very quickly. And again, I share when I do things, but what I don't want to be doing in this video is saying everybody should be selling. For me as a full-time trader, what has allowed me to have success is developing a system of rules and discipline. And when I make a mistake or when I learn a lesson, new rules derive from that mistake. And so I started my trading career 2010 to 2014 trading penny stocks and trading cannabis penny stocks. And I learned a ton of lessons. The reason I have not been giving back my profits in crypto and Canadian cannabis and all these things are because I did it back in the penny stock days and I learned my lessons. So some of the lessons and rules that I have from back then are: do not invest in OTC names and do not hold OTC names over the summer. I learned that because consistently on the OTC, volume dries up over the summer to a significant magnitude and opportunity significantly decreases. And because you have dilution, generally speaking, in OTC penny stocks, that just means a slow bleed all summer. And so I learned these rules, and I know some people are going to say, well, this is different. This sector law is changing, blah, blah, blah. That may be the case, but I have to stick to my discipline and my rules that got me here. And if I were to be making excuses, this time's different, I'm breaking this rule because this time's different, it would not go well over the long term. So that is my mindset in this space from my prior experiences. Also, you're going to hear me talk about the broader market a lot because, in my opinion, in the absence of volume, and we know without, this sector does not have a lot of volume, generally speaking, and it's the headlines that bring volume. And so we can say that pretty much without headlines, there's not going to be a ton of volume. Without volume, the sentiment of the broader market is going to have a massive impact on this sector. Right now, the S&P 500 and the NASDAQ, I'm bullish because they're monthly bull flags and we're sitting just under all-time highs. I don't see any longer-term red flags in the market at this point in time. Now, maybe that changes over the coming few weeks, but I'm bullish the broader market. If we see another leg up to all-time highs in the broader market and another wave of euphoria over the summer, then that can definitely help these names, hold on near their recent highs on the S3 headline reaction. If we see weakness and further monthly consolidation for another couple of months in the broader market, that would require significant change from what we're seeing recently. But if that were to happen, this sector can easily slow bleed through the summer as well. So in the absence of headlines, the broader market is the most important thing for me personally. So again, as I mentioned, late summer is when I'm going to start fundamentally being interested in this sector again, just as far as having, at that point, it'll be potential short-term catalysts in play. And again, that's something from my experience where in the penny stock days, you skip the summer, you come back late summer, early fall, and then it has usually a bull cycle, certainly on voting years, into the new year and, early into the new year. So that's it. That's the context of what I'm looking at for the sector here. Now we're going to look at the charts and try and remain unbiased. But obviously, there's no such thing as being completely unbiased. So now you know where I stand and the context from where all this technical analysis is going to come from. All right, so oftentimes I talk about bull glasses and bear glasses, which just means, I can have a bias based on trend or what I think is the most likely scenario, but I always want to be looking at the other perspective to ensure that I'm not missing something or getting blindsided. And so I'm going to talk in this video about a bull perspective and a bear perspective because obviously different people see different things when they look at the same chart, depending on bias. So on MSOS weekly time frame, we've been talking about this potential weekly rising wedge, which is a bearish pattern. It shows bull exhaustion, where you break resistance straight into a pullback, break resistance straight into a pullback, break resistance straight into a pullback. It shows a lack of follow through and the potential that bulls are tiring. So that's what a bear is seeing on this weekly chart. What's a bull seeing? Well, a bull is seeing we're still in a weekly uptrend. We set a weekly high or low at 7:30, and now we have a new weekly high or low at 8:32. And so a bull could say, from a swing perspective, if 8:32 is support, the longer-term uptrend remains intact, and the bulls don't have anything to worry about. I wouldn't argue with that. I would say, yeah, that makes sense. So that is, again, two perspectives of the exact same setup. I would not be surprised in the slightest to trade within the range of the headline week for a significant period of time, meaning that range is obviously very wide. That's a 30% range plus on MSOS here. And so, maybe we see a test of the support and it holds, and then we bounce to a lower high. And next thing you know, it's into June and we're still trading within this range. That's a possibility, especially if volume is low. So we're going to be keeping an eye on volume and looking at the daily chart for MSOS. We can see it's pretty consistent. Obviously, the big spike on the headline and after the headline, but putting up 8 million a day, roughly 8 to 9 million shares a day this past week, average, I guess it would be 9 million average, which is, $80 million in dollar volume. That's a good sign. But what I'm looking at is essentially bulls are trying to defend the headline day low. And there's a lot of individual names where that is the case. Even higher listed names, which we're going to look at, that's the case as well. So the low of that day on the headline for MSOS was 876. The low of this week, 876, 877. Very clearly that level means something to somebody because it's being defended. You can see this pretty much 3 touches at that level. So we can now say the most important short-term support zone is 876. After 876, we're looking at that weekly level that I mentioned of 832. But 876 first. As far as resistance, we have 945 as a resistance level. That was the high of Thursday. We opened at that level to the penny on Friday, dropped hard, but a pretty decent bounce into the end of the day. So what I'm looking at real short term to start next week, if we fail 945 on Monday morning, I'm going to be looking for an hourly equilibrium to shape up, a tightening range to shape up to start the week. If we break that bullish and get over 945, we're then going to be looking at $10. We know from the way down, $10 is a very significant resistance. So if we break 945, we can then say, okay, 876 key support, 10 to 1006. It's a range, not a specific price level, but that's resistance. So there's our support, there's our resistance. That's a very wide range. That's about a 13% range or so. And so the midway point of that range, 124.62, fast math, 38, 938, maybe 938 midway point, which is pretty much where we stand right now. So we're almost in the middle of our key ranges. Again, you know, the way I describe it is World War II trench warfare. There's one side's trench, here's another side's trench. You're going to bounce around and battle between that. You're going to charge resistance and fail, and you're going to get rejected. Bears are going to defend it and pull back, and until one of those levels significantly is overrun and then becomes the new, you know, what a bull wants to see is overrun the trench of defense from the bears and then turn it into your trench. Now it's support. That's how you would progress out of here. But those are the three levels I care about. 945 short term, break it, it's all about 10, and of course 876 support. So this was the second chance I was talking about. It was a pretty weak bounce, but once I saw rejection from 10, I started exiting my position a bit under $10. And again, just to revisit this mindset, it was, whoa, this candle surprised me. Here's my second chance. And if you go back and watch the video from that weekend, it was talking about that 4-hour lower high second chance for both bulls to sell and bears to jump in. So there's my second chance. I was surprised, and then I missed a good bit of this drawdown. Same thing. I was surprised by this candle. There's my brief, small second chance, but that's where I sized down a bit. Well, a lot. All right, so all about 945. Get over 945, it's all about 10. And again, we can easily do something like this. If the bulls get over 945, but then we pull back, next thing you know, a week goes by. If the volume stays this low, you get the idea. Summer slows down. And of course, slows down in the broader market as well. I'm already seeing the S&P 500 and NASDAQ volume drift off, specifically Fridays here in May. All right, individual names, earning reports. So on the whole, I'm not going to go into fundamental specifics. That's not what I do. Other people do that. But what we can say is, generally, these were good earnings for some of the leaders in the sector. And we can also say that not really any reaction. The sector is still not trading based on fundamentals in a meaningful way, in my opinion. And many people would agree with that. And so I'm going to stick to price action. But we can say TrueLeaf has relative strength still. You can see, look at the close. We're almost at the close of the bounce high. I guess MSOS is closing near its bounce high as well. But again, look at the low of the headline day and look at the low of this pullback. The low was 1028. We got down to 1042 and then started a bounce. And so again, it's entirely possible that we just do something like this. If we get a little bit of green to start the week and then pull back, we can, again, this is such a wide range on that headline day. We can trade within that range for a couple of weeks while we digest. And again, it's just the scales doing this. If we tighten up, if the bulls start the week and then we set the lower high and tighten up, it's just the supply and demand scales doing this, but getting smaller and smaller while we wait for a new piece of information. And heading into this week, that's exactly what was going on, but on the shorter term time frame right here. That's the supply and demand scales doing this, getting really tight, and then supply winning with the clear bear break. So we're looking for that to potentially happen just on the daily time frames. That's best case for the bulls, would be a few days of green to start next week, and then just tighten up, and then we'll get to the end of May and look for a break of that tightening range. Green thumb, same deal. Bulls need to get over 1347 to try and see some of this. The most important support, first level, we're looking at the low of the headline day. Again, look at, just held it by a couple pennies. 3 pennies defending that support into the bounce. After that, we would look at 1168, but we care about the low of the headline day as the most important short-term support for the vast majority of names that we're going to be looking at. CureLeaf. So CureLeaf looks a little bit different here. Again, didn't come as close to the low here. Again, this chart by itself, there's no major red flags. If I'm looking at this in a vacuum, I'd say, okay, you know, I'm cautious of a rising wedge because I recognize the bull breaks are lacking follow through, but I also recognize that we are setting higher lows. If we hold 469 and build a new base of support, it's a higher low. So again, it's not game over for the bulls here. It's just they've got some work to do. And as far as these individual names and relative strength and weakness, let's just look real quick. Again, divide by MSOS. TCNNF divided by MSOS. clearly relative strength, but we can also say, that hasn't really changed over the last 6 weeks. If you're going sideways, you're just doing what the underlying is doing. So we're doing what MSOS is doing, but we outperformed MSOS very significantly to start the year. And we're not far from the strongest that we've ever been compared to the ETF. Green Thumb is weakening, has been weakening over the last couple of months compared to MSOS. Again, nothing major in the short term, but the last 2 months, underperforming MSOS. Curaleaf is outperforming the last couple of weeks. And we could say this past week, we hit the strongest that Curaleaf has been compared to MSOS almost in the entire year. To start the year back here is the last time we were up at these levels. So just very roughly speaking, we can say that TrueLeaf and Curaleaf are a bit stronger compared to MSOS over the last couple of months, and Green Thumb is a bit weaker. Also want to mention briefly, again, the lack of liquidity. Nobody is surprised by that that's following the sector, but the end of the day stuff that's going on in these names like TCNNF, again, something that was happening and standing out. This is the 5-second chart. So you got 5 seconds where you've got 24,000 shares traded and the price hitting 1156, 1170. And then the next tick, the next 5 seconds, there's a 500 share order that hits at 1129. What I was observing is they were just pulling the bids at the end of the day. There's a bid at 1160. 5 seconds later, the bid's at 1129 without being sold into. Generally speaking, you got to see market selling to fill the orders at 1160, 1158, 1155, 1152. All these orders on the order book in a liquid market would have to be sold into with a market order to be able to drop down. So you would need volume selling at the bid to drop down and see this happening. Because we're on the OTC, there's less market makers, there's less liquidity. They just disappeared. The bids just disappeared, and a tiny amount of volume allowed for a 3 to 6% drop, which is, tens of millions of dollars of market cap, if not more, of this name being moved by no volume. This is just, again, comparing it to Apple. Obviously, they're very different markets, but it's just not possible to happen on something liquid to see this kind of price action. So, you'll hear people talking about the inefficiency of this market because it's on the OTC, and that's absolutely true and what is going on. Which, again, is another reason why I don't want to hold OTC names through the summer if it's going to be a slow bleed. But let's see how we break the tightening range. The next bit of information that I'm going to get, bigger picture, is do we break the low of the headline candle or the high of the headline candle? And there's not going to be any major new information until that happens. Tier 2 names on the US side, AYRWF. Again, this is just all about the weekly equilibriums. We had one back here that formed for months and months and months. It broke bull. Now we got another one that's forming for months and months and months. And it's all about 210 support. If we hold 210, we're going to keep tightening up into June. If we break 210, it's a bear break. Look at the difference here. We closed below the low of the headline day on Friday. That is a difference from tier 1 names. No other tier 1 name has done that we just looked at. So that stands out as being a bit weaker. TSNDF, similar as far as its tightening range. Bulls need to hold 145. We broke the low of the headline candle. So again, we know these tier 2 names are even less liquid than the tier 1 names. And they're going to go up more in a bull market. They're going to pull back more in a bear market. And so we're seeing them showing some weakness since the headline sell-off. Relative weakness in the sense that they're breaking that low. VRNOF, same deal. It broke the low, not by much, but again, tightening weekly range. If we hold this support, we can keep tightening up for another couple of weeks, but that's the next major bit of information for the tier 2 names. How do these tightening ranges break this summer? On to the higher listed names. SNDL gave us relative strength in the sense that we broke the headline high. Nobody that we just looked at came close to doing that. But we did reject from 267, and then we had a bearish, at least an initially bearish earnings reaction. So if we drop down, we're looking at the weekly. Again, weekly equilibriums, when you have significant volatility, they show up all over the place. But high or low, if this is a low or high, if we break 215 this coming week, The lower high is set, and we're going to look to do this into June and tighten up for a good period of time. But on this name, the burden's on bears to break 215 to set that weekly lower high convincingly. GRWG had a little bit of relative strength as well. Again, reaction high broke. And you can see we got a daily uptrend. So here's our daily uptrend. Higher low, higher high, new support on the headline sell-off, tightening range, bull break. So, I mean, that's a good sign. Simple statement for GRWG. If 261 support is holding, the bulls keep full control here. Now, similar to SNDL, we've got this resistance from back here that we're not over. And if we fail to break that level, we're just going to tighten up on the weekly. Higher low. Is this a lower high forming? Bears need to prove to us that it is. If it is, we're going to tighten up for a few weeks. If we hold the daily uptrend, then we're going to head up towards 338. So to set the weekly lower high, generally speaking, you've got to lose the daily uptrend, and then it's shaping up. So for SNDL and GRWG, the daily higher low pattern is key this coming week, but we can say there is relative strength. So, I mean, it's all about perspective, right? The majority of arguments on Twitter about trading or whatever, charts, whether you're bullish or bearish, is just you're not defining timeline and perspective. So I can say that GRWG and SNDL have relative strength since the headline to be able to get back to it. But look bigger picture. We didn't break the high of April. MSOS broke the high of April. So there was relative, so MSOS was stronger on the headline reaction, weaker since the headline. So again, it just depends on what lens you're looking at. The way that, statistics can be not manipulated, but you can show specifics. This name's been performing this name in the last 6 months. Well, that's because you're choosing the peak here and the lowest point here, and you know that you can shape the world of statistics based on perspective and how you're shaping them. And it's the same thing with markets, whether something's stronger or weaker. It all depends on time frame. All right, CGC. So big pop, fade. We are holding the headline low. So bulls holding that 813 support at the moment. This is a potential daily bear flag. We had a stair-step drop. The last time we had a solid stair-step drop was here. Lower high every single day, 7 days in a row. When that pattern broke, the bull saw significant follow-through. Here's a lower high every single day, 6 days in a row. There's the bull break. We're missing the follow-through. If we drop down to start this coming week and break 880, or 876, I should say, then the daily bear flag confirms, and we're then looking at 810 and 813 as the next support level. But again, there's a lot of space, or even if the bulls save it here, a lot of space for a lower high compared to the reaction high. And so weaker in the sense that we are testing the lows of consolidation right now. ACB, same deal, potential daily bear flag, headline day low is in play at 618. If 618 breaks, that's a solid win for the bears. What the bears want to see on these names is a big enough pullback on the weekly so that when we bounce on the weekly from here, we're just going to look for a lower high. Just like the daily. Again, these time frames are all just fractals within each other. We know that a daily lower high is the most likely result of this bounce. And if we keep pulling back on the weekly, we will know that the weekly lower high will be the most likely result of that bounce. But it's one time frame at a time, and right now we're waiting for the bulls to prove something on the daily, which they're not doing yet. So 628 and 618 key short-term support on ACB. TLRY. So still weak, again, not back to the headline low, but we could say that aside from the headline day, since earnings, the bulls have not done anything to show any sign of strength whatsoever. Slow bleed, sideways, headline help, slow bleed sideways. So the vast majority of trading on Tilray is slow bleeding sideways unless there's the headline help. And so now we have a lower high at 222. If we drop down to start this week and break the low of consolidation, our new short-term resistance will be 203. Again, it's just a little downtrend right now. And it's just a question of, how long does that downtrend remain? Knowing that bulls can show up and change that, just like they did back here. I'm certainly not expecting anything like that in the near term, but watching the tightening weekly range. We've got our low, high, higher low, Now it looks like a lower high. We can easily tighten up on the weekly into June. Cron, relative strength. Came up and tested the reaction high. We're getting real tight here. I like this chart. I always love when charts get real tight. We could say volume and volatility are coming to this name soon. The most important support is 252. The most important resistance is, might as well call it 3 psychological, but 298, 299. Again, if we're red on Monday, lower high is set and tightening continues. All about 254. And I like this chart. I haven't been watching Cron at all recently, but because this is so nice and clear, I will definitely be watching Cron this coming week. Earnings bull reaction helped on Thursday. And psychedelic names, MNMD. So sell off on earnings, but bulls did buy that dip. Great volatility. 5-minute stair step. Broke bull at 823. From there you go 11% over the next couple hours. So still great volatility. And bulls are doing everything they can to hold this weekly EMA 12. Still holding it and grinding it the last few weeks. Anything under 992 is just a daily lower high. So you could say we are in a little daily downtrend. CMPS had a bullish earnings reaction, but gave it all back. I'm looking for a monthly higher low on CMPS at some point, but there is zero indication that that's shaping up right now. So overall, sector here, MNMD, clear lead bull for me, but I'm not seeing anything that makes me interested in the other names at this point. And I'm still all cash this sector as well, just being real patient and observing. But I watch MNMD more than anything else in this sector. All right, that's a lot of talking. So again, short term, bulls need to prove something to hold the lows of the headline reaction day and to keep tightening up within that range. All right, feel free to ask any questions. Hope you have a great weekend and do good things.